opportunities.
We see opportunities in the healthcare sector, in cyclicals, in dividend stocks.
How cautious are you now?
I would be on the cautious side.
The recovery will be very quick.
Because so many people are looking for an opportunity to enter the market, and they buy on dips.
What is your outlook of inflation?
That's not a bad inflation.
欢迎收看《顶级投资人》，本期嘉宾是 Franklin Templeton 的全球首席市场策略师 Stephen 先生。Franklin Templeton 是一家来自美国、历史超过70年，在165个国家和地区运营的全球顶级投资机构。截至去年年底，管理的资产总规模大约1.5万亿美元。而 Stephen 先生在资产管理行业的工作经验超过了30年，之前他曾经主管 Franklin Templeton 所有的股票投资业务。而随着美股一直创出新高，越来越多的人开始担忧是不是调整就在眼前，而且这波涨得如此之快，跌起来是不是也会非常的惨烈？此外，最近快速上涨的大宗商品价格以及美国10年期国债的收益率，也让大家怀疑市场风格是否已经切换。这些问题 ，Stephen 先生在采访中都一一做了解答。
I read your outlook, which said that the year 2021 is still a year of uncertainty, but also a year of ample opportunities. So generally tell us, where do you see the opportunities?
Well, in general, we still think the equity market will have a lot of opportunities in 2021. We see opportunities in the healthcare sector, in cyclicals, in dividend stocks. On the fixed income side, we see opportunities on the corporate side of debt and in private debt. So in terms of stocks in the economy, services and areas that benefit from a COVID recovery should do well.
Yeah. Regarding the U.S. equity market, many investors, including some veteran managers, have shown their anxieties about the market reached new high over and over. So still believe the U.S. equity market still will outperform in the year 2021?
Well, outperform needs to be seen on a relative term. So given the investment options, particularly fixed income, yes, we think that the equity market will outperform, primarily because of the dynamic duo of fiscal policy and monetary policy that is likely to be supportive of equity. The big unknown, of course, is how the pandemic vaccinations and healing from the pandemic will roll out in the Western world. And if that is delayed, that would be probably the greatest risk for the equity markets in the US.
So on a scale of 1 to 100, so how cautious are you now on the US equity market?
I would be on the cautious side, probably a 30 or 40. The markets are at an all-time high, so it's very hard to be aggressive around the equity markets at this point. That said, how would you respond to that? You'd be cautious in your investing, probably those parts of the market that have had fantastic performance over this last year, I'd be particularly cautious about, and move towards parts of the market that may be undervalued or maybe less risky.
Another story is that we all know that the monetary environment is very supportive. So the fund managers feel pressure to hop on the bandwagon, and the dominant fear is the fear of missing out the opportunities. So how much do you buy this story?
That is definitely part of the story. We use an acronym in English called FOMA, fear of missing out. But there's another acronym called TINA, there is no alternative. So when we look at the investment horizon right now, particularly between fixed income and equity, that portion of portfolios that was fixed income, which traditionally has been about 40% of portfolios, does not look pretty attractive. So equities look more favorable relative to fixed income. And with the monetary response and the fiscal response, I think it looks like the best opportunity. Cash is not a very good opportunity now because it actually has a negative return if you take inflation into consideration.
What are the signposts on the road that you're looking for? I mean, when you see the signpost on the road, you can see that some kind of correction, maybe sizable correction is coming.
a correction being defined by dropping 10%. So I wouldn't be surprised if there's a drop in the market of 10% sometime this year. But I would also expect the market to probably recover fairly quickly from that. Why might it fall? I think the greatest reason that the market might fall is if we get some very bad news about the pandemic, say the virus mutates and it's much worse than we thought. If something like that were to happen, the market could fall pretty significantly. Right now, the market is pricing in a recovery, a strong recovery, a very strong recovery in the second half of this year. If that doesn't look like it could happen, we could see a correction in the market.
So you said that if there were a correction in the future, and the recovery will be very quick.
I think the recovery could be quick because of so much money in cash, because so many people, including I'm imagining some of the listeners to this program, are looking for an opportunity to enter the market, and they buy on dips. So I think at least any initial correction would see a lot of money flowing in, and people probably buying on that dip.
If we can look something in the history, so the next correction will not rival the ones in 1929 or the year 2000.
Well, let's really hope it isn't similar to 1929, because that was 80% down. But that was largely caused because of mistakes by the reserve banks of the world and trade. So I don't in any way expect the economy to go back to where it was 1929. 2000 is a little bit different reflection. That was the tech bust. As we all know, there are a few tech stocks that are quite high, and there is some possibility that we could see a correction in those technology stocks that have had such a huge valuation increase. Although we think a more likely scenario is that some of the other stocks that haven't performed and the great spread between those high-performing technology stocks and the rest of the market is likely to close.
So maybe the real risk on this market now is the risk of inflation. What is your outlook of inflation in the year 2021?
Well, certainly those who are monetarists and have expected a lot of inflation, frankly, since about 2008, have not proven correct. That said, I would expect inflation to recover or to return in the second half of this year as the economy comes roaring back, when we finally recover from the pandemic, when enough people have had the vaccines. That will be demand-driven, inventories are low, services could have a big spike in inflation, but that's not a bad inflation. That's probably an inflation that companies will be able to at least temporarily pass the price increases on to their customers. And once the supply meets the demand, that type of inflation could abate. Systematic inflation that's really harmful, that could be really bad for the market, I think is unlikely for a very long period of time.
You mean the systematic inflation will not be seen in the long period of time?
I don't think so, yes. Long period of time, let's say for the next 3 years or so.
But you also said at the second half of this year, maybe there will be some pressure on the prices. Will that reach the 2% of the target of the Federal Reserve?
I think that it's possible in any given short period of time, a month or something, there could be a spike in inflation. But I think as long as the Federal Reserve knows that that's just temporary because of the opening of the economy and the quick demand, that inflation would drop very quickly. So I think it's highly unlikely that the Federal Reserve would react to that.
When do you see that the Federal Reserve will start tapering?
It's hard to tell, but I think it's unlikely in the next 3 years or so.
That's good news for the market.
That's very good news for the market, yes.
Franklin Templeton 其实很早就进入了中国。2004年，他们和国海证券成立的国海富兰克林基金是中国首批合资基金公司之一。2016年，又在上海成立了 WFI， 也就是外商独资机构。而随着中国金融市场对外资的进一步的开放，下一步 Franklin Templeton 这家全球领先的国际资产管理公司的中国策略到底如何？我们的节目还在继续。
What's your take on Tesla, given by all measures the valuation is maybe extreme?
Yes, it is. This is such an interesting question because we're very large managers and we have different styles of management and managers have different views. So we have managers who think that Tesla is terribly overvalued, and we have managers who think that Tesla should be a significant part of a portfolio. Tesla is now valued at more than all the other automobile makers, and does that make sense? So growth and more aggressive managers tend to still like Tesla and believe that it can further appreciate, but more moderate and value managers would certainly see it overvalued.
Sir John Templeton, one of the co-founders of your company, Franklin Templeton, once warned that about the risk when people say it's different this time, but he also said that 20% of the time they are right. So do you think it is 20% now?
Sir John Templeton was a very famous investor who invested all of his life. He lived to be over 90 years old, so he had at least probably 70 years or 80 years of investment experience. And during that time, certainly he saw a lot of changes from literally the introduction of cars to the introduction of the internet. And I think that's the great question we have, particularly with some of the growth stocks at this point. With interest rates being very low, that makes future earnings worth more than they might otherwise would be. That's one of the reasons growth stocks have performed so well. The question is, and that's the question Sir John would have, is it different this time? Are they worth that? Will they actually have those earnings that follow?
So we all see that the growth stocks outperformed the value stocks in the past 13 years, especially in the year 2020. So what's your take on that?
We would expect a narrowing of that difference between value and growth over the coming few years. Now, to be very honest and full disclosure, I would have said that a year ago and been very wrong. So many people have predicted the return of value stocks, and it hasn't happened. But once again, I'll say that I think this year, as the economy recovers, I think cyclical stocks and those stocks that would benefit from an economic recovery are likely to do very well.
Let's talk something about China. Where do you see the opportunities here?
I have been a China equity bull for some period of time now, and continue to think that there's a lot of opportunity in the Chinese economy as it turns from being less of an export-driven economy to being more of a consumer-driven economy. And of course, another big change in China is that it's so driven by technology now. So we see a lot of opportunities in China and other emerging markets. But I think in general, if you look at a bit of the imbalance of the United States valuation within the total world, we think that markets outside of the United States could do very well over the course of the next few years.
In terms of China, do you have some preferred sectors?
In China, the two sectors that we tend to focus on are the consumer sector and the technology sector. Those are the areas where we tend to be overweight in China.
You have a JV here, but now Chinese authorities told you that you're allowed to go solo. Do you have the plan like that?
Well, certainly when we look at opportunities, we're looking at the opportunity of going solo or being joint venture. The joint venture has worked with us, worked well for us so far, but we'll look at all the different opportunities we have now that China is opening up. It's a very positive opportunity for us.